Hey guys, Joseph Henson here with Henson CPA Group. I appreciate you joining me today. We're going to jump right into it. We're talking about payroll tax problems, why the IRS treats these differently. Again, I'm Joseph Henson CPA with Henson CPA Group. As a reminder, my booking link is down below, but let's go ahead and get right into this. What makes payroll taxes different? Most tax balances are viewed as business liabilities. Payroll taxes are different for a number of reasons. Part of the money was withheld from employees. The business is temporarily holding these funds. They're basically holding it in trust. The IRS views these amounts very seriously. That's why payroll tax situations often receive faster attention. What do payroll taxes actually include? Payroll taxes generally involve federal income tax withholding, social security taxes. This is both the business side and the employee side. Medicare taxes, again, personal employer payroll obligations. Most business owners don't even realize how quickly these balances can grow if filings or payments start to fall behind. Why businesses end up falling behind. Payroll tax issues don't always start because of irresponsibility. There are a lot of issues, a lot of reasons this can happen. Some of the most common include your cash flow pressure. You have rapid growth within the clinic and you need cash now. Don't call JG Wentworth. Staffing increases, trying to cover short-term expenses. A lot of times businesses borrow from payroll obligations intending to catch it up later, and that's where the problem begins. Payroll taxes are the easiest loan you'll ever be able to take and the hardest one to pay back. Why the IRS responds quickly. Payroll tax issues tend to escalate faster because the IRS sees them differently than standard tax balances. Businesses may receive notices more quickly, collection actions sooner, increased scrutiny, and the IRS generally prioritizes payroll tax compliance very heavily. They don't have to do a lot of investigation into this area. They know where it's at, what you owe, or what you should be doing, especially if you're doing W-2s at year end, because they see this. They see, hey, this person claimed this on their taxes. We don't have that money. The risk of waiting too long. One of the biggest mistakes businesses make is delaying action. I know last week we said, hey, don't rush in. With this, it's a little different. Get representation immediately. CPA, Henson CPA Group, EA, lawyer. But by delaying, often it's because they hope revenue will improve soon. They feel overwhelmed. And then business owners are unsure what options really exist. But payroll tax balances can compound quickly with penalties, interest, and there are other additional enforcement actions. What many business owners don't realize. The business situations, payroll tax problems can extend beyond the business itself. The IRS may evaluate who was responsible for payroll decisions. Is it the owner of the business? Is it a manager? Is it a CFO? Is it a controller? Who actually makes payroll decisions? Who had authority over finances? Is it just a business owner, or is someone there making decisions on what gets paid when who's not the business owner? And who controlled payment decisions? Same thing. Is the business owner the only one that's allowed to make these decisions, or how does that work? This is part of why these situations require very careful handling. Common signs of trouble. There are a lot of warning signs and your business could be in trouble, but some of the warnings are going to include falling behind on payroll taxes. I need to pay my employees. I can't pay this portion. That's an issue. Making payroll but delaying tax deposits. Again, I paid this employee, but I need to just wait 15, 20 days to pay the taxes. They're withholding their Social Security, their state taxes, whatever it is. Then the notices begin stacking up, and then you avoid opening anything from the IRS. It just scares you. You can't sleep at night. You're worried. These situations are usually easier to address earlier rather than later. The better approach. The best first step is understanding the full situation before reacting emotionally. We talked about this last week. That will usually mean reviewing filing and balances, identifying how far behind things are, understanding the options you have and what may exist, then creating a plan intentionally. We want clarity because it matters more than panic. The panic will not get you anywhere. Clarity is how you survive this situation and get your business back on track. What is the goal? The goal is not just getting rid of notices. The goal is stabilizing the situation, preventing escalation, creating a sustainable plan moving forward. That is going to usually start with understanding the numbers clearly. If your books are a mess, your numbers aren't going to be accurate. We don't know what you owe, where you owe it. We can rebuild it, but we have to be able to see everything. If your clinic has fallen behind on payroll taxes and you aren't sure how serious the situation is, we can help. We offer a free strategy call where we'll gather information, we'll talk through it, we'll give you an idea of what this looks like. We'll help you understand what's happening, what the notices means, and what options you have. Again, I'm Joseph Henson, Henson CPA Group. You can email me directly at joseph@hensonCPAgroup.com. The booking link is in the comments below. But until next time, thank you for showing up. Thank you.